Gold futures. These allow you to use leverage to speculate on gold prices. A futures contract is an agreement to buy or sell a commodity at some point in the future. This date is known as the expiration date. These contracts were created to allow producers, miners, to lock in prices so that they have a guaranteed price for their gold production. On the other side, manufacturers know exactly what they're paying for materials so they can better manage their cost of production months in advance. Futures trade in 100-ounce contracts. At the time of this video, the price is $1,830, meaning that each contract is valued at $183,000. However, instead of paying the full amount, you only need to cover the margin, which per COMEX is $7,400 per contract. As the price of gold fluctuates, your margin account value will also fluctuate. If this precious metal goes up, no problem. For every dollar increase, you make $100. However, if the price falls, your account goes down and you have to make up the difference to maintain the $7,400 margin requirement. This is known as a margin call. So for a very small funding amount, you can own a lot of gold futures. If gold moves in the right direction, you can make a lot of money very quickly. However, if it moves against you, you have the potential to lose more than your original investment. If your margin drops below the required amount, your broker may close your position and you will be responsible for any losses. Also, when the contract hits the expiration date, you will need to fulfill the purchase or sale if you're still holding it. For example, if you bought gold, you will need to pay the full purchase price on this date. Likewise, if you sold it, you will need to produce the amount of gold specified in your contract. And for this reason, most speculators close their positions before the contract expires. This is known as contract rollover. Speculators close the current month's contract and open a new contract with a future expiration date. Speculating with futures can make a lot of money very quickly, and for this reason, they are a popular pitch for internet trading system promoters. Unfortunately, most of these never live up to the hype.
A quick note for independent investors. If you've been investing in the stock market, you know that high-quality information is everything. That's why we've partnered up with Nicoya Research, one of the fastest-growing newsletters that specializes in precious metal stocks, dividend investments, technology stocks, and cryptocurrencies. Its founder, Jason Hamlin, is a market research professional with over 15 years of experience in brand management, analytics, and business consulting for Fortune 500 companies. And since 2009, he consistently outperformed the market with an average annual return of 50.2%. If you want to get access to the best financial research available, then sign up today and use the code GSC20 to receive 20% off any subscription plan you choose. Check the link in the description box below for further details. Now, back to the topic at hand.
Studies show that over 97% of active traders lose money and only 1% are actually profitable. You get better odds in Vegas. And on a personal note, I once traded silver futures. The margin is less than gold, but they work the same way. I opened an account for $5,000 and in less than a week, my account was down over 50%, though silver had only moved a few cents. I barely slept that week, completely stressed out about my position. I knew then that this type of investing wasn't for me. So unless you're a very sophisticated investor, I would avoid gold futures and consider other options on our list. Reasons to invest: high leverage, small initial contribution amount, margin, and liquid. Reasons to avoid: you can lose more than your initial investment, margin calls, need a broker that specializes in future contracts, and 97% of active traders lose money. Precious metals may be right for some investors, not for others. If you're looking to maximize your returns without regard to risk, it may not be the best choice for your goals. However, with the economic and geopolitical challenges we're facing now, this year may turn out to be the best one to diversify with gold and silver. If protecting your wealth from the ravaging effects of inflation is important, consider adding one or two of these investment ideas to your portfolio.